Good afternoon, everyone. As Gabby said, I am Jeanette Vieira, and I want this presentation to be very conversational and very interactive. So before I jump into some of the areas that I want to touch on, are there any specific questions that you might have specifically regarding business credit? Because I want to make sure that if you have questions, feel free to unmute yourself and ask them, or if you'd like to put them in the chat, you can definitely do that. But I want to make sure that you're getting as much out of this hour that we have together to make sure that your questions are answered and that you leave with the information that you need. So are there any questions that we have out there?
Let's see, Alex says, looking for a nice general background. Let's see, we've got another building business credit for sole proprietorship under my business EIN and not my social security number.
Okay, we can talk about that too. All right.
Again, oh, sorry, I was just going to say again, as Jeanette mentioned, if anyone has any additional questions, you can always feel free to unmute your mics just to address the question as well.
That's right. All right. So then we're going to get rolling on this. So today we're going to talk about business credit. I like to call it Business Credit 101. And when we start talking about business credit, there's a lot of confusion with business credit. And I speak with business owners every day. Oh, we had another question. Did you see what that is, Gabrielle?
Yes, sorry, I had to unmute. Yes, it says, would like to build business credit and be able to get financing.
All right, definitely. We can definitely talk about that. So with business credit, there's a misconception out there because a lot of, and I'm guilty of it myself, just a little history before I jump too far into this. I worked in corporate America for the majority of my career, and 6 years ago started my own business. And when I started my own business, I researched different ways. How do I fund my business? How do I grow my business? Where do I get capital? And, everything that I saw was utilizing my personal credit, utilizing my personal assets, and tying myself up in any debt that I might acquire for my business. And I had no clue until I started working with Jay Galt and started navigating this whole business credit arena that there's actually a better way, and that doesn't have to be the norm for us. So with business credit, there's a lot of misconceptions and just difficulty in identifying, well, is it business credit or is it still truly personal credit? And a lot of that comes with, I think we all have a business credit card, has our business name on it, has our name on it. It's our business credit card. And 9 times out of 10, while it is a business credit card, it is still tied to your social security number and tied to you personally. So with business credit, it's just like personal credit, where it's going to help evaluate the financial strength of your company. So as we want to keep those great credit scores personally, we want a great credit score for our business because it's going to unlock so many different things for your business and give you areas of expansion, and you get better rates on insurances, and there's just a lot of things that go on with it. So true business credit is going to separate the financial obligations and aspects of a business from its owner. So it allows the business to establish creditworthiness on its own. So it's on the business, it is not tied to the individual. That's where we run into a lot of challenges, because I think of any of you as business owners, if you've gone out and got funding, they ask for personal guarantees. And that's kind of the norm that we see in the industry. So any questions on that? Okay. So business credit, just like personal credit, has its own score. So business credit's a little bit different though. If somebody told you, if you had an 80 score on your personal credit, you'd ask, is that person even alive? How do you get a score of 80? But in business credit, the rating goes from 0 to 100, with that sweet spot being 80 and above. So it's very, very different. And your personal credit score does not impact your business credit score. They're two completely separate things. Now, while they may use a personal credit score to get financing for your business, that's not going to impact what your business credit score is. So for individuals that might struggle with personal credit, their business credit would not be impacted by that. So they're completely separate. And again, that 80 being our sweet spot. And again, if you have any questions, do not hesitate to raise your hand. So I talk with businesses every day, and a lot of them are very fortunate because they don't need credit, so to speak. And a lot of times when we talk about business credit, we automatically think about lending and getting capital and financing. And that's not the only reason to build business credit. Definitely having a strong business credit score is going to open up accesses to capital. And I think we all know as business owners, it's better to have the credit available and not need it than really need it and have to go find it, because it seems like whenever you need capital, it's difficult to find. So it's going to give you access to capital. It's going to give you the opportunities for business growth, to take advantage of opportunities that might arise to either expand your business or move your business into a completely different arena or start a secondary business. It also helps with cash flow management. And when we start looking at some of the ways that we build our business credit, having access to vendors that might be a net vendor. And when we talk about net vendors, those are individuals that will extend credit to you on a number of days. So it could be 30 days. You purchase it now, you pay it in 30 days. That gives you a little leeway on your cash flow and can help with your cash flow mapping or your cash flow management. I thought there was another question.
Yep, I was just going to interject and let you know. So it says, can you get business with a DBA/sole proprietor?
You cannot separate your business from your personal as a sole proprietor. So while you can get credit on your EIN if you have one, the magic with business credit is when you have a separate business entity like an LLC, S Corp, or C Corp, that becomes its own living, breathing thing. So when we start talking about really truly getting out from personal guarantees, you have to have an entity in order to build it. So you can build EIN credit as a sole proprietor, but you will not be able to separate personal from business, because as a sole proprietor, you are the business. Does that answer your question? I think we have another one there.
No, she just actually put down, she meant business credit. So can you get business credit, which you understood that was her question.
Yeah. So when you get business credit, I mean, you can definitely get business credit as a individual, but it's always it might be business on your business EIN, but it is always going to be tied to your personal credit because you're personally guaranteeing it.
Okay. And below she says, yes, thanks. So difference between S Corp, C Corp, and LLC?
There are some differences. Most businesses, depending upon their structure, go with an LLC. A C Corp and an S Corp, or an S Corp and a C Corp, they require a lot more, as you have to have a board of directors, you have to have monthly meetings, board meetings, a lot of documentation go into that. So it really depends upon what the best fit for your organization is. They are all considered their own entity. The best thing that I always recommend to people is to talk to your CPA or your tax professional, because there are also specific rules in, as an owner of an LLC or a C or a S Corp, how you get paid. So it's always best to talk to your tax professional who knows, your specific situation, to find out which one of those entities is the best for you. But like I said, an LLC for a business that has like one business, you don't need to have a holding company or a big corporate structure. Then usually an LLC is where a lot of people go.
Okay, we've got two additional questions. The first one would be, if you build credit as sole proprietor, does it start over when you change to LLC?
If your EIN moves with you, so if you think about your EIN is your employer ID number or your tax ID number for that business name. So let's say I went and I got an EIN under ABC Business and I was a sole proprietor for a year, but now I want to create an LLC and I'm going to create an LLC under that EIN. Anything that's been built under ABC Business on that EIN will move to the LLC. If you start that LLC with a new EIN, then you will be starting from the beginning. As a sole proprietor, when they're looking at your EIN and your social security number, they're kind of entwined because they all belong to the same entity. So a lot of times it's recommended to just get a new EIN and start fresh with your corporate structure. If you've got really, really good credit built on your EIN, then by all means, move that over.
Okay, let's see. The next question was, which is the best way to file for an LLC? And then how would I start getting business credit from there?
So with an LLC, I'm not sure what you mean the best way to file.
Life Coach Dawn, do you want to unmute and maybe give a few additional details?
Yes, thank you for the opportunity to speak. Yes, so the best way to file, meaning I know there's a lot of different organizations that say, hey, I can help you file your LLC. Then there's also businesses that do it themselves. Like what's the best way that you recommend to go about filing an LLC? And then the second part is like, once you have your LLC, how do you start establishing the business credit? Or I don't know if you're going to get to that later.
Yes, we will get to that part later. It really depends upon the individual. There's places you can go online and file your business entity. There's a lot of paperwork that goes in behind it. And if it's not set up correctly, then sometimes it can take you longer to file. I actually have an attorney firm that specializes in business formation. They also help with like business contracts and things like that. I refer my clients to them because I know that it will be right the first time. There are specific guidelines in how you register it, the state that you register it in, because you can set up a foreign or a corporation outside of California, just depending upon what your needs are. So I do have someone that I recommend, but there are different services online that you can also do. I think it's LegalZoom has a really good filing package. And then you can go to the California Secretary of State. Their website also has a lot of resources on how to file that.
Okay, and let's see here. We had another question following Life Coach Dawn. This one says, how do we move the EIN over to our corp structure?
When you file for your corporate identity, you file it with an EIN number. So you would take that EIN and include that in your filing, and that would become the registered EIN for that corporation. But definitely when you're looking at your EIN and you're deciding, should I get a new EIN or should I just take my existing EIN and move it? There's a few things that you need to be aware of. Like when I first did my first EIN, it was under my business name. But when I went to file a corporate structure, I changed my business name. So those things have to match. So I would either have to file a request to update my EIN to the new business name or just get a new EIN. I opted to get a brand new EIN so that everything was clean and attached to the new corporation with the new name. So you'll, just kind of look at different things like that. Also, talk to your CPA. They can advise you on the EIN, because if there's anything as a sole proprietor, when you have your social security number and your EIN, because sometimes those get intertwined, there might be some information on your EIN that you may not want to pull into a new corporation. So starting fresh with a new EIN might be the best option.
Okay. And we've got another question in the chat box. It says, I'm waiting to use my EIN until I get an LLC. Is that smart?
That is very smart. Yes.
Okay, and we've got a comment again from Life Coach Dawn, says, good point. I was thinking of changing my business name as well when I do. Will my other business credit card / account with other name be void?
Not unless, well, I guess that would be up to the bank. What I find a lot with business credit cards is while it may have your business name on it, it's really still tied to you personally. So the best way to see this is if you look at your business credit card and it has your name and then your business name underneath it, it's a business card issued on your social security number and issued to you personally. So as long as the bank doesn't close it and that EIN, if it's on an EIN, is still valid, you should probably be able to use that card. I would not transfer that card because it's not truly a corporate card. And we'll get
Okay.
into some of those nuances in a few slides, but
Nice. Okay, that appears to be it for the questions as of now.
okay, perfect. So business growth, cash flow management, emergency funding. We never know what is down the road. And I like to, when I talk to businesses about their business credit, I like to compare it to your insurance. I mean, we all buy insurance. We all have insurance on our business. And we do that just in case a need comes up. So if you think about having a robust business credit profile as an insurance policy for your business, that you could access emergency funding should you need it, that's for me is one of the best ways for a business to be able to weather a storm that might be coming up to their business. Another big one is truly separating your personal from your business. And when individuals decide to start a corporation, an LLC, S or C Corp, we do it for a few different reasons. One, there are tax advantages to having a corporate entity or a business entity in that way. Another one is, as a corporate entity, there is a liability protection that you have. When you are combining personal and business in a corporate environment, you're actually piercing that corporate shield and you're opening yourself up to personal liabilities. So separating your personal from your business it's really important, because every time we go out and we personally guarantee funding for our business, a lot of times that shows up on our personal credit. So if I were to go out and want to buy a new car, but I've got a significant amount of business debt that I've personally guaranteed, I may not qualify because my debt to income ratios are off. Business credit does not look at debt to income ratios. It's a completely separate, and we'll look at that in a few slides. It looks at how you qualify for credit completely different. So separating those two and truly keeping personal debt on your person and business debt on your business is to me, one of the greatest advantages of building business credit. Also, things like your insurance premiums, think your workers' comp, think your liability insurance. If you have a fleet of vehicles on your business, the insurance that you're paying for your fleet can all be positively impacted by a strong business credit score. A strong business credit score and having access to capital can actually add value to your business, because it is seen as an asset to the business. So you can actually add value to your business by having a robust business credit. Also, for strategic financial management, if you're looking to grow or you're looking to maybe move out of one product line into another, being able to have access to capital so that you can make those changes allows you to really be strategic in how you grow and run your business. The last two kind of tie in together. You protect your personal assets. And I'm sure everyone on this call has worked very hard their entire lives to build the assets that you have and to build the businesses that you have. Being able to separate personal from business protects those personal assets. When we combine our business and our personal, or we're intermingling personal funds and business funds through, securing personal credit for business debt, through, utilizing monies that we take from our personal account and influx into our business, that is breaking that corporate shield, and it's opening up your personal assets to liability should anything happen with your business. And then the last one, of course, is maintaining that corporate liability protection, because that's one of the biggest reasons people set up corporations, is to have that separate entity and have that completely separate from themselves. So I see that we have some more questions.
Yes, ma'am, we do. Let's see here. Okay, we've got my bank offered, let me see, my bank offered me a business line of credit. I know it will still be under my personal since I still just have a DBA, but do you think it's beneficial to apply for the business line of credit?
If you need funding and that's something that will be a benefit to your company, then by all means. Will it build your business credit? Absolutely not. So it is, it's separate from your business credit. So, there's always going to be times when personal guarantees and debt that's secured for your business through a personal guarantee is needed. And I'm not here to tell you that's bad, you should never do it, because we've all done it and there are all times when it's appropriate to do. It really depends upon what your specific need is. It's always great to have access to some sort of a line of credit for your business, just so that you have, the opportunity to capitalize on all of these things. That's really, kind of a decision that you need to make to see if that's the best route for you. Now, one thing is, even though you have debt for your business that's personally guaranteed, that does not mean that down the road you cannot build business credit on your EIN. And as you gain capital through your business EIN, that you can start accessing capital through your business and start paying off personally guaranteed loans. We do it for businesses all the time to help them get out of the personal guarantees that they've made and truly separate their personal from business.
Okay, and her next remark following the question of the line of credit is, I know it's a large tax fee at the end when having an LLC, but I know it's more protection. That was just her comment.
Yeah.
And oh, sorry, go ahead.
There are definitely fees, and they are annual filing fees, and there are some specific filing requirements that you have to submit. I forget the name of the report, but there's a report that has to be submitted. It's it is a chunk of money, but if you see it as an investment into your business, and you're exactly right, truly separating your business. And then what's nice about it, and I'll just give you guys a little story really quick. I have very, very close friends that own a restaurant. It's a family-owned restaurant. They've had it for over 40 years. They happen to be in Fresno. And dad's tired. He loves hanging out with his friends at the restaurant, but he's tired of running the business. And the son has been running the business for probably the last 12, 15 years. They went to transfer that all over. They are a sole proprietor. So he can't just transfer that business to his son. They have to go through this entire process of basically a purchase on paper for the son to take over that business. If that were an LLC, all they would have to do is go in and change the principal manager or the principal officers within that LLC, and that transfer would be done.
What would your recommendations be to build my business credit as a sole proprietor with not so good personal credit?
The challenge with that is you're going to really need to build your personal credit, because as a sole proprietor, they're going to look, even if they even if they use your EIN as the reporting number, they're still going to look at your personal credit score. So the things that we would normally do to build our own personal credit, you want to look at, are there late payments that we need to clean up? Also utilization. And that's the one thing with personal credit. If you've overutilized, and I think 35% is the magic number, and I apologize if I'm off on that. Let's say I have $1,000 credit limit. They want to see that I'm not utilizing more than 35% of that, and that I'm not maintaining a balance of more than 35% of that month over month. So if you have credit cards that are over that utilization, getting those paid down to under that amount is going to help increase your personal credit. With your EIN, there may be some lenders out there that will look at your EIN and give you credit solely based on your EIN. But because you are a sole proprietor, you are your business. So you're not really able to truly separate your personal from your business in that situation. But definitely looking at, I think there's multiple different ways to improve your personal credit, but definitely looking at those different areas and start, taking one at a time and start, paying off debt when you can, making sure that there are no late payments, looking at your credit report. Before I started working closely with businesses on building credit, I was guilty of not paying attention to my credit report. And when I started looking at it, I found that there had been things that were reported incorrectly and some things that weren't even mine on my credit report. So monitoring your credit report, both personal and business, is always a really good idea.
Okay, and Jeanette, we have a few more questions. Do you want to wait until following your workshop, or do you want me to proceed on with the question?
You know what? Let me get through some of these
Yeah.
slides, because it might answer some of the questions.
Okay,
And then, because I don't have a big slide presentation. So
I know.
these are just some of the advantages. So I get this question all the time. I've got businesses that have been in business 20, 30, 40 years. And they're like, why is it so hard? Why do I not have a business credit score? I've been in business forever. And there's a few reasons. And one of the biggest ones is few lenders actually issue EIN credit. Most of the time, as a business owner, they will give you business credit, but it is tied to your Social Security number and it is personally guaranteed. That is the norm. And that is what you're going to see with most banking institutions. That's just the way that they do that for small business. One of the things that's really interesting is that's not the case for Wall Street. So Wall Street has been using EIN business credit forever. So one of my goals, and one of the goals here with Jay Galt, is we want to make sure that small businesses have access to capital just like Wall Street businesses do. So those are two of the issues that make it a little bit hard. But one of the other things is, even if you find a business that is going to extend true business credit to you, only 7% of the companies that do that actually report to the business credit bureaus. And building business credit is all about activity. Unlike our personal credit, where if we have too much credit, that can be a bad thing because of income to debt ratios, business credit looks at how much credit are you being extended and how are you utilizing and managing it. So the more credit that you have reporting, the more credit they will give you, completely counter to what it is on personal. So when you're looking at getting lines of credit or other types of credit reporting to your business credit bureau, we want to see multiple lines. We don't want just 2 or 3. We want to see 7, 12, 15, whatever that might be, but we want a lot of reportings, and we want them to report monthly so that there's consistent activity, because that is what's going to build your score very, very quickly. And it's also going to build the amount of money in which you're recommended for credit. So on a business credit report, it'll tell you what your score is, and then it'll tell you what your recommended credit is. And I've seen it run the gamut. I've seen people that have a credit score of 50 and they're a company that is millions of, $2 to $3 million in revenue a year, and their recommended credit limit is $1,400. And the reason for that is, while they may have a lot of reportings, they're very, very small dollars. So it's the more money you can get and the higher dollar amounts you can get reporting to your credit, your business credit, it increases those dollars. So they're not looking at, this is a $6 million company. Yeah, we could give them $250,000 worth of credit. They're looking at what your history is and what's being reported. And then the last thing is business fundability. Just like when we go to the bank, if we've got, 700 plus credit score, they're going to be pretty happy to see us. If you've got a lower credit score, they might not be as happy. They might not find us as attractive. So business fundability is the way that the credit bureaus and lenders validate a business, and they determine, is this a viable business? Is it a real business? So there's some things that go into business fundability. And this foundation, I work with businesses every day on building this foundation. These are some things that we all, and I'm guilty of it, I've done it myself, that we've all done wrong when we've set up our business. And here are just some visuals of them. So things that are looked at by the credit bureaus to determine, are you a real business, and lenders. First of all, are you filed with the Secretary of State? Do you have a business entity with the Secretary of State, your LLC or your corporation in some points? As archaic as it may sound, they want to see you in a 411 directory. So you need to have a phone number that will report to 411. Like most of the business owners that I work with, we run our businesses on our cell phones. I, for years, ran my business on my personal cell phone. Having a business phone account, be it a business cell phone account, be it a voice over IP through like a Spectrum or some other Ring Central or some other company, or be it a good old landline that is a business line, is imperative to get that number into 411. They look at, what is your address? While it's getting more common to have home-based businesses, there are still a lot of lenders out there that will not lend credit to home-based businesses. So having a business address, a corporate business address or a commercial business address is really, really important, especially if you're looking down the road to be able to access large capital. That doesn't mean you've got to go out and get an office. There are actually virtual offices that you can purchase that service, and you are set up as a commercial office. The disconnect that I see here, and a common issue that I see, is people will go to the UPS store or they'll go to the post office and they'll get a mailbox. A mailbox is just that. It's a mailbox. It is not an office. So setting up your mailing address correctly is very, very key. They also want to see that you have a website, and they want to see that you have a domain-based email. So if my website is abcbusiness.com, I need to have an email that's Jeanette@abcbusiness.com. Gmails, Hotmails, back in the day, AOLs, all of those are really not seen as valid business emails. Gmail also being an issue because they're seeing more and more fraud coming from Gmail accounts. Also, a lot of servers and a lot of, when you start trying to email corporations or email people, Gmails are stripped a lot just because of that. So those two things are really important. Having a business checking account that is in your business name under your business EIN. So a lot of times we'll set up a business checking account, but it's not set up correctly. So we want to make sure we have that. And then the merchant services, this is going to be your credit card processing. And while this is beneficial, it is not required. But what is required is that when you set that up, it is set up under your business name, under your EIN, and with the same address in which you are filed with the Secretary of State. Consistency in building your fundability foundation is key. And when I say consistency, like myself, for instance, I got my EIN before I got my business address. So when I filed my EIN, it had my home office address. When I filed my LLC, I had a business address. So now I've got a different address on my Secretary of State than I do on my IRS filing for my EIN. That automatically sets up red flags and fraud warnings when the business bureaus are looking at your business. So making sure that you are consistent, no matter where they look at you, they see ABC Company at 123 Happy Lane everywhere. And having those consistencies will help build that fundability. Not having them sets up roadblocks. And a lot of times we won't even know that that's why we're not getting funding. We just get declined for whatever reason. So I know we had a couple of questions. Is there something, should we jump into those, Gabrielle, or should we continue? Well, actually, we're almost at the end. So
yeah, you go ahead and continue, and then
okay.
I'll ask you.
Okay, so some of the things that you can do, you want to set your business foundation, set your business entity separate from yourself. You want to get your business credit reports, and there are 3 major business credit bureaus: Dun & Bradstreet, Experian Business, and Equifax Business. So you want to go in, you want to enroll in those. You want to make sure that you have secured your Dun & Bradstreet number or your DUNS number. If you go in and you search Dun & Bradstreet and you see your business is there, you already have a DUNS number. You just have to create a login and claim your business. But making sure that you're enrolled and that your business is enrolled in the credit bureaus. And then you want to start building accounts. And the easiest way to do this is to get what we call net accounts. So net accounts are those goods and services that you receive that they will deliver them to you and they will invoice you in 15, 30, 45, 60 days, whatever the agreement might be. Those are the easiest to get, and you tend to find more of those that will actually report on your EIN. So looking for business net accounts that will work for your business. There are a bunch of them out there. Uline, which is an online supply account site. They're one of the best reporters of business credit. So, and you want to start by getting 2 to 3 of those accounts. Now, the goal is to use it, pay it, and repeat. So it's kind of like just keep doing it. So a minimum of $50 is what you need to generate a reporting on a vendor account or on a EIN credit account. And then you want to pay that on time. And the biggest thing with business credit is there are no grace periods. So we're used to, we have that 30-day window that we're not late on personal guarantee. That does not happen with business credit. So what I always recommend to my clients is that you pay your accounts a minimum of 5 days early. What that does is that gives you that little safety net that, sometimes if we pay a bill after a certain time of the day, doesn't get credited till the next day. If there's any delays in having your payment credited, it's not going to hurt your credit, because 1 day late is late in business credit and it will ding your score. And then once you've had some vendor accounts, you're going to monitor your credit. You're going to look and see where that's going. And then you're going to go out and you're going to start looking for revolving accounts. Revolving accounts can be found in many different ways. They could be store accounts. So think of your Costco's, your Home Depot's. They could be things like gas cards. It could be a Chevron or a 76. There's a few fuel fleet cards out there that you can use that. And you may even be able to get a revolving business credit account. And again, you want to get a couple of those reporting and then use it, make your timely report or your timely payment, and continue to do that. And then always check and monitor your credit. As your credit starts increasing, then that will open up opportunities for you to get capital from different areas and, you know, find different financing that you might need for your business. So then I think we're on to questions. We're on to questions. So I know we have some there.
Yes, ma'am, we do. All right, let's see. So the first question is from Felicia. Felicia, I'm not too sure what you're referring to. She says, is the first year still free? Felicia, would you like to unmute your mic?
Yeah, I thought that the first year of your LLC, you don't have to pay that big huge fee at the end of the first year. Is that correct?
Not that I'm aware of. There, yeah. I don't know. Yeah, not that I'm aware of, but there might be something that I'm just not.
Or maybe that was something they did during COVID. But I heard like the first year that you file your LLC, if you don't claim any like if you don't claim any if you claim losses, the first year, I heard that your payment is waived. That huge $1,100 payment is waived, and I got that from my tax person.
And there might be something in that that is specific to the tax, like if there's a certain income level, or like you said, if there's certain losses, there might be something where maybe it's done at a rebate during tax time. I'm not quite sure.
Okay, thank you.
I apologize for that.
Oh, no worries. I just wanted to double check because my tax person said that. So I just wanted to verify, since you do the building business credit, you're expert in this area.
All right, let's see. The next question now is from Angela West. This is a rather long one. Let's see. I am sole proprietor as a mental health provider. I have had my small side business in this way. Hello? Oh,
Yes.
okay. Okay, sorry about that. Let's see. I have had my small side business in this way for about 6 years, and 2022 was the first year I had a little over 6 figures in gross revenues. And of course, my net, my net was much smaller than that. Is there any benefit in an LLC for a small part-time sole proprietor with only one self-employee and no plan to expand to a larger situation? This is a two-part question here. So that was the first. Second part is, I pay a janitor and bookkeeper, but don't have any employees.
There definitely are some benefits to that. The way that we are taxed as a sole proprietor is different than as we are taxed as a business entity. I would definitely talk to your tax professional. I'm and right, wrong, or indifferent, I'm one that I feel if I have a business that I am interacting with the public in any way, shape, or form, I want the protection of a corporation. I want that liability protection. There's just some things there that shield yourself and your personal assets should there be a slip and fall or anything along those lines. There's benefits of having a corporation in addition to the taxes. Definitely talk to your CPA to see, because I don't know, your specific tax situation, and see corporations are taxed different than personal. You are also able to set up within a corporation, you're able to set up a dividend and a salary, I believe, depending upon which structure you choose. So I believe that there would be some benefits there for you, but definitely talk to your accountant to see. I work with a lot of professionals in healthcare who have incorporated for that.
Next question is from Life Coach Dawn. Should I wait until my business is making a certain amount of money to file for LLC?
Absolutely not. It's funny. I work with a lot of startup companies, and one of the benefits of getting your corporate structure in place is one, you're building everything on your corporation. Also, when you start looking at like capital, say you're going to go out and you're going to look for capital, there are some lenders that want to see that your business or your corporation has been in place for a certain period of time. So, and as soon as you start your business entity, you can start building business credit. So the sooner that you do it, you're going to have a couple of things. You're going to have the ability to immediately start building business credit. You're going to have the liability protections that come with being a separate entity. And you're going to be able to start really separating your business from your personal. And it's never too soon to do those things.
Okay, awesome. Let's see. Life Coach Don has a comment. Wow, congrats, Angela, on making so much revenue. Next question from Life Coach Don again is, any virtual office recommendations? How is it different from a post office box?
So a post office box is just a mailing address. It's not identified as a business for you as an individual. And normally when you go, like I've got a UPS store right around the corner for me, and I know that they have mailboxes, and so does the post office. When that address is searched by credit bureaus or lenders, they see that that is a UPS store. So it's not seen as an actual business. And I do have, 2 or 3 different businesses that we use and that we recommend for virtual offices. I can definitely email you those links, Felicia, if you want to provide me your email, or if you want to give it to Gabrielle, I can actually share those links with her if she wants to share them with the group.
That's fine, not a problem. I most certainly can put it in the chat if you like.
Yeah, let me go. I have to get them.
Oh, well, don't worry about it then. You can
Okay.
send it to me and I'll send it out to all registrants.
Okay.
Okay. Let's see here. Life Coach Don says, when I file LLC with new EIN, will the other business be DBA? Wait a minute. Will the other business with DBA still be, it says Revenant? I'm not sure if that was relevant, or do I have to close it?
No, you can have as many businesses as you want. Now you filed your DBA with the state. So if you're still going to be running that business in addition to whatever your new entity is, you do not have to close it. So it just kind of depends upon what you're looking at, unless you're going to make the DBA now your LLC. I'm not quite sure, because you can have an LLC with a DBA filed underneath it. I see it all the time with individuals who have purchased franchises. So they'll have their, ABC Incorporated, and under that I'll have a DBA of McDonald's, because their corporation's not going to be McDonald's, but they run their business as McDonald's. So you can have a DBA underneath your LLC.
Okay. So I will need another DUNS as well once I have LLC?
Yes, you will have a separate DUNS number with the LLC on the EIN that's tied to that LLC.
Okay. Who is one of the best reporters of those types of accounts? I missed it.
Recorders of what types of accounts?
Because you were saying, when you were talking about like net revolving, it was like in the beginning, the first couple of bullets, you were saying, and this place is one of the best reporters of, but I don't remember who you were referring to, like one of the actual accounts.
It was Uline. I believe we were talking about net accounts.
Yes.
Yes. Uline, it's uline.com. It's an online ordering. Think of it like it's like supplies. So I think office supplies, other different types of supplies that you might need. So.
Okay, great. And then Felicia said that she uses Uline. Angela West says, thank you for your response to her question. Another question from Life Coach Don. How do I make sure when I come up with my new business name that no one else has it?
There's actually, if you Google business entity name search, or you can do it a couple of different ways. You want to Google a name, see if it comes up anywhere. There's also on the Secretary of State, there is an entity search function. You can search and make sure that there's not a name that is exactly like yours or similar to yours. But I ended up doing both, and I found stuff on Google that they weren't exact matches, but they were close enough that I changed my business name a little bit. So
Dana asks, are you limited on how many EINs you can have? I have 2 different sole proprietor businesses. Should they share an EIN?
no, they don't necessarily have to. It gets, I mean, I've not heard that there's a limit on EINs. As a sole proprietor, you can have different EINs, and that's going to be more from an accounting standpoint, because all of that money, when you do your taxes, it all rolls in together. And it might be I think it's Schedule C that they list out all of the items for that specific EIN. But in the end, they're all together. But I don't know of a limit that you can have on EINs. As a sole proprietor, I would definitely talk to my CPA to see if there's an advantage to having more and more EINs.
Let's see, Ms. Torres now asks, as a childcare provider, is it better to go LLC or sole proprietor?
It's really going to depend upon your specific situation. If there's, as a healthcare professional, are you like in-home care? Do you have, I'm not sure, home care? So are you like a daycare home care, or
Yes.
Okay.
Yes, she
So
said childcare provider.
childcare. Okay, I'm sorry, I missed that.
Mhm.
It really depends upon your specific needs and your specific situation. Each business has its own nuances and are all a little bit different. So I really can't say just it's always best to do it this way. I can say it's always best to talk to your CPA, see what your specific situation is, because there are different tax laws and different tax requirements when you start looking at being an LLC or a sole proprietor, and how you pay yourself is a little bit different. And, they would want to do a side by side and see, as a sole proprietor, this is my end of the day, this is my tax costs. As an LLC, this would be my tax cost. Does it make sense to change?
All righty. Let's see, Sarah High says, yes, please share them. So she was referring to the links that we were referring to. So once I
Okay.
get that information from you, I will definitely send it out to everyone. Let's see, Felicia is saying it costs $20. I'm not too sure what that is in regards to. Felicia, would you like to unmute and elaborate?
It's in regards to when you go to the state of California and you do
Mm.
your name search, you put in your name search, and let's say you don't find there's nobody's competing with your name, but you're not really ready right now to do an LLC. You pay a fee, and you pay a fee, you mail it into the state, and they hold that name for you for a period of time. So that while you're establishing your company, nobody else will use that name. However, if you don't file all your paperwork by the time of the period, I don't know if it's 6 months or a year, I forget what I did, then they release the name.
Mm-hmm.
So you can't hold the name forever. What it does is it gives you time to get all your stuff in order, to file the paperwork. So let's say like I was Gumbo Girl, and I wanted to hold it before I could. There was another one I found, but that went out of business. But I wanted to hold it because when people start finding out what my name was, I didn't want them to like snag it up before I could like get all my ducks in a row. So I don't know if it's 6 months. I don't know. You can look it up. It's a time period where you just pay the state, and it's like $20 or $25 to hold the name till you get all your stuff in order. So that's the question to how do you find your name search. That's
Okay.
just from my receipt.
Yeah, and I think they call it like a business name filing or something like that. And I think it's 6 months. I don't think it's a year, but they may have
Mhm.
changed. They may have changed that.
Yeah, you're right. It was 6 months.
So that,
Okay, thank you. Okay, we are at 1 o'clock, so we do have a few more questions in the chat box. I'll go ahead and read them.
Okay.
One question from Life Coach Dawn is, any trademark company recommendations?
I've never personally trademarked anything. So I apologize. I do not have a recommendation for that.
Okay. And the last question in the chat box is from Angela West. My first coach at SCORE told me to make my business just my name, since I am a licensed provider. My friend made up a creative name, but does the same thing. What is the best option?
I don't know that one option is necessarily better than the other. I know I've worked with multiple physicians and they set up a practice so that if they decide to sell it, so they have a practice name. And for them, part of the reasoning was if they want to sell their practice, it's easier to sell their practice than to sell their name. So but I don't think that there's a right or wrong answer on that. So I think whichever works best for what your business needs are, your marketing needs, any of those situations, whatever works best for you.
Okay, that makes sense. Let's see. Ali DeRoche says, thank you so much for sharing your knowledge. Angela West says, got it. Thanks. Life Coach Dawn, no worries. This was great. Thanks. And yes, please send me info. She provided her email address, which I can send to you for the recommendation for virtual office. The speaker was going to send us. Not a problem. I'll definitely make sure to get that to you. Angela West, awesome presentation. Felicia, thank you. Effie, thank you very much.